Hello and welcome once again to the Weekend in Review and look ahead. I'm sorry I haven't been able to make my videos these last couple of weekends because I was out of town and I didn't bring my laptop. One of the reasons was because I was on a school trip and I wasn't able to bring it in that weekend. And then because I stayed after the school trip in Chicago to visit schools, I was unable to do it there too. I was able, in fact, to trade this entire week because, well, not trade, but watch the markets this entire week because I was on spring break. So, I do have a lot of commentary to go and say. I would also like to add that this may be my last time showing this video with Scottrade. I have switched over my account to Trade Monster, so from probably next video you'll see me with the Trade Monster platform instead of the Scottrade platform. I could access the Trade Monster platform, but I just much rather do Scottrade for right now. We saw a lot of volatility in the markets this week. You know what, I'm just going to add the VIX chart up here just so we can go and really see, because we saw a lot of the high flyers really get hit this week. It wasn't necessarily due to bad market data or anything like that, but really, a lot of high flyers like Tesla and the biotechs in particular really got hammered this weekend. We saw this as people kind of were doing almost like a flight to safety thing. They were cutting some of their positions. On the previous Friday, we saw a lot of selling at the close because of fears about Ukraine over the weekend. Kind of saw that a little bit this Friday too. Friday was mainly a short covering rally is what I heard. Both on CNBC and through some of the social media some of the social media sites. That can really be observed on pretty much all the major indexes except for the VIX. We see this big sharp pop, and right about 11 o'clock-ish, we saw this immediate kind of decline. And if you actually look on the VIX, 11 o'clock was pretty much the bottom there. Then it just kept going up. Tried to do a little mini rally at the end, but we were unsuccessful. Really, it was just a really kind of a weak rally, once again short covering. So we saw those people then re-short into the weekend. So expect some slight selling here on the open of this next weekend, unless there's some good news coming out of Ukraine, although it doesn't seem like it. So going into the technicals of what happened this last week, each one of these is the 5-minute, 5-day charts. Dow did close above its 21 and 200 simple moving averages. It did not reach the 50 though. Like I said, not bad data this week, but mainly it was just trading that really got people worried in the markets. Great spots to get in on some of these names though if you are a long-term investor. Just same for the S&P as it is on the Dow. Didn't break above its 50-day simple moving averages, but closed below the 221. The Nasdaq, it was a little bit different because this was kind of the epicenter of where all the nasty trading was, because of the Nasdaq holds a lot of the biotechs, has stocks like Tesla, Amazon, Google. Apple, which didn't actually trade that bad, so you saw a lot of selling kind of going on in the Nasdaq, which is why we see it only close above its 21-day and not necessarily the 250 as well. And if we look on the VIX here, we saw a lot of traffic coming on the VIX, which did close above its 50-day simple moving average, which is kind of interesting, kind of the opposite of all of the other indexes, but closed below its 221-day moving averages. I just brought up a chart of the VIX because I like to use it as a tell for what people are thinking, because it is the call to put ratio in aka the fear index in the market. So I like to go and have a chart of that up, or at least watch it as I see all the other markets perform. That way it gives me a better gauge of how people are thinking. Coming into the economic data and news this coming week. On Monday, we have the Chicago PMI data. We are trying to look for a 60 estimate versus last period of 59.8. On Tuesday, we have we are going to want to look for the February construction spending. We are looking for 0.1% increase versus the last period of 0.1% increase. We're also looking for the March manufacturing index to rise from 54 from last month's figure to 53.2, so actually decline there. We're also going to be looking for March light vehicle sales, which are going to be released. Also, the Euro area February unemployment rate is released, so there's been some concerns about Europe coming on, whether they're going to, it kind of looks like that they're going to start QE by possibly buying some U.S. Treasuries, in fact, so we want to keep an eye on the Euro because the Eurozone, because we are in interconnected markets nowadays, unlike we were kind of way before I was trading. But you just want to keep some of these international concerns in place. Some people do have very high exposure to Europe because they see it as a turnaround. Just trying to go and tell you guys to stay alert on all news global. On Wednesday, we have the IMF Managing Director speaks about global economy in Washington. That's going to be something to be interested about, to see what her thoughts are going to be on China, on Europe, and the U.S. as well. And on Wednesday, we have February factory orders. We're looking for 1.2% versus last period of negative 0.7%. On Thursday's kind of a big day for economic data. We have February international trade. We're looking for a negative 39 billion versus last period of negative 39.1 billion. So a slight 0.1 billion increase we are looking for, but still a trade deficit. Weekly jobless claims are released, and the ECB Governing Council meets, followed by interest rate announcement and news conference. I guarantee you that is going to be a much-watched event there on Thursday, because we will see Draghi come out and possibly say that they are going to start QE, and maybe interest rates might go down. So yeah, definitely Thursday, watch the ECB Governing Council. And then on Friday, the main thing that we have is the March non-farm. It is a jobs report. We have the March non-farm payrolls. We're looking for 195,000 versus last period of 176,000. We are looking for an unemployment rate of 6.6% versus last period of 6.7%. Key note to watch there is we are starting to inch very, very close to the Fed's target of 6.5% unemployment. That kind of was their target for when to start QE, although that was kind of differentiated when they actually did start to do QE. Switching now over to my portfolio, how I did for the week, I have to say it was not that good. I am long QQQ, so we have already kind of covered that. Took some pain there. AIG was a nice little stock going on for most of the week. Let's see here. What charts do I not? Starbucks, so I need Coors, which was a high flyer that kind of got hit. I need V, and then Under Armour eventually I will get to. So starting off with JP Morgan, not a whole lot of news except for Thursday. It was either Wednesday or Thursday that they talked about. Here, actually, I'll throw up. There we go. Now I know what date we're talking about. We're talking about Thursday. Sorry that I switched to city. But for JP Morgan, we saw a slight decline on Thursday due to the overall just kind of weakness in the markets, although it did rise above all of its simple moving averages there on the close on Friday. I kind of was disappointed in this name. We did get a new 52-week high on Tuesday, though, so that was kind of nice. But it was able to pass all of its expectations from the Fed in terms of its stress test, which I do like that they do stress tests. I think that's a really, really good thing to do. Tim Geithner was a genius, in my opinion, when he said that we should go and do those. So, in other ways, not a terribly news-orientated tape for JPM, but nonetheless, it was down due to the rest of the market. Same with AIG, although it did perform kind of well on Monday, Tuesday, and Friday. It's below that 50 mark, as we see here, kind of touched it multiple times. Did close above all of its simple moving averages, and I have to say it was an area of strength in my portfolio this week. I'll bring up Starbucks first before we go into cores. Starbucks and cores, similar charts. Same with Visa. Very, very similar charts. All these were kind of known as the high flyers since they had very good performance last week. Starbucks did close above all of its simple moving averages, but was faced with some rather tough trading this week. Friday being the only bright spot of the day that it was positive. Still not a whole lot of news from Starbucks other than that McDonald's is promoting free coffee with breakfast, but if you ask me, that's a losing battle. Core's kind of the same way. Hasn't really gone and said a whole lot. Did break below kind of this, what we were in kind of a stagnant-ish phase in cores for quite some time. We had this trading range of kind of 97, like 90, high 95 to like 98 range going on, and then it finally broke that on Monday when we started to see all these high flyers get some profits taken out of them. But I do strongly believe in cores. I think they're a great name. Definitely a buying opportunity, and I really do think we saw that on Thursday when it hit its low here down in the 89s. I think people said, you know what, we got to buy this thing, and we saw this kind of up move pretty much continue on from then. Let's see here. I'll switch one of these to Under Armour so we can go and talk about that. Under Armour felt some pain as well. Did perform kind of nicely though on Thursday a little bit. This kind of spike up and kind of faded, but same with kind of Tuesday. Gave me a fake out pop here. It did get a new 52-week high last week, if I remember right. Yeah, right here. In fact, it broke above that 120 level that we were all talking about, but unfortunately just kind of continued to go down afterwards. But if we look at a much longer chart, we actually see this similar pattern come up. Where is one? Oh, we have to actually continue up even further. Nope, not going to be able to do it there. 1 week. Let's do 10 weeks. We saw a very similar pattern almost. Here once we hit 120, kind of came down, bounced back up, had this kind of trading range. New 52-week high, down move, kind of moving into that trading range. Now granted, it is a much lower trading range in terms of where we are, but not a terribly new thing to Under Armour, as we see here that big massive pop in earnings, new 52-week high, trading range, pop, new 52-week high, bring down trading range. So we can kind of expect a gap up from here, I have to say. We've seen this before. Just kind of have to wait and really watch it for a while. Still a strong company. Earnings are coming up for a lot of these names, by the way. We just finished the first quarter, so you kind of have to watch out in terms of what could happen, because a lot of these names did show very, very strong earnings. So you could see that very well continue. I do think that they will continue. Visa kind of had a very bad day on Friday because of a lot of news about Walmart is suing them for $4 billion to try and get back some of the card swipes. I have to say Visa's had a pretty impressive legal team ever since I started following it. They don't like to lose many court battles. They don't often lose many court battles. If I remember right, they settle cases a lot. And I think that this Walmart call is BS. It's just Walmart trying to cover their butts in order to go and in order to kind of, you know, say, look, we didn't lose that much in the quarter. They're trying to create earnings through litigation is what they're trying to do. Now, did see some heavy shorting here on Friday around noon to 1 o'clock, and it didn't. And I honestly said I was kind of scared because I was watching a lot of my profits drip away throughout that time. But it did kind of bump up a bit, which was nice. I wanted it to close. I was watching it. I was hoping to go and get 212. So I'm very, 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 very glad that it did get 212, but did close below all of its simple moving averages. for there. Another stock that I have, HDGE, which was kind of interesting this week. Really started playing around on Wednesday and Thursday was when it really started to kick in, mainly because we didn't see that much of a huge kind of rise, decline through the market, so it was only select spaces. As we see over here, it did close above its 50-day moving average, but below its 221-day moving averages. Remember, this thing does short some of those high-flying names, although it did get kind of a little bit crushed because it is short IBM, and IBM actually had a pretty good week. Going on into what happened this week, I'm going to start bringing up some things like the IBB, which was being flashed on CNBC a lot. This was the Nasdaq Biotech ETF. Let's bring up a chart of Tesla. Let's bring up a chart of IBM just because. Just to show you kind of what happened this entire week, we had stocks like IBM, which have been dogs for forever, make a new 2.5-year high. Here, now I don't advocate IBM. I actually am short this name because of the hedge holdings, but everyone says that this was kind of just a trade. It was kind of this flight to safety. You saw a lot of old tech names rise. Oracle was up. Cisco was up. Qualcomm had a pretty decent week, if I remember right. A lot of these old tech names you saw had very good weeks because they were kind of transferring out from names like Facebook here into the newer tech. Facebook actually had a pretty alright day on Thursday, but did close below its simple moving averages except for the 21-day, and let's make that a 5-day chart just so we can get the weekend perspective. So we saw some old tech names do very well as opposed to the new tech. Here's Tesla. Now they did get a boost on Friday because of some of the I believe it was actually, when you look at what happened on Friday, the New York did say that they can go and continue selling cars even though they did not have a car dealership that they could sell them straight from company to the public. So that will probably get a boost on Monday. But Friday it did kind of enjoy some of those gains because of that and because of the short covering rally. But it did get hammered throughout this entire day. It lost. I'll just do a 6-day just so I can get my reference point back. You look at it. Start off the week at 230 and it ended at 212. So, these names you have to have some heart to go and hold because of that. And here's really where the bloodbath was, the IBBB. A lot of biotechs got slammed this week, and they have done some very, very good returns. I did really like Biogen. I do think it is a place where you should probably get in if you do like those names. It did close below all of its simple moving averages, but you can go and see here. It had a lot of it hurt. It really did hurt it. Let's see, does that change the chart? Oh, here we go. Here's the comparison to the QQQ in terms of percentage. It closed down 2.4% versus the IBB, which is down 6.6%. So there's kind of what you could see, and I'll do Facebook to IBM too, just to go and show you kind of how it was. This kind of new tech, old tech trade going that happened. See here, IBM was up 0.8%, which doesn't seem like much, but when you're down 10%, 9% on the week. Now, some of this was because Facebook did acquire a company called Oculus, which is a maker of these kind of cool video game glasses. I think it's a cool company. Not sure what he's exactly doing in terms of for Facebook's future, but hey, I really don't know. I don't track Facebook all that often, but it's kind of interesting on that standpoint. And I think with that, I'm going to leave you guys off. Let me show you my portfolio just a little bit, just to show you guys I am human. Big losses this week, as you can see. I'm down in Under Armour, down in Hedge, but you gotta remember that's a hedge. See the little good joke there, and slightly down on AIG. took a lot of losses on cores. I was up $200 pretty much starting off the week, and now, a lot of losses there, but hopefully you can make them back. I do think we will see weeks like this again, maybe not the exact type of trading style of it. Old Tech and high flyers go down, but Old Tech comes up. I do think you should see some volatility increase throughout this year, so keep an eye on that. And any questions, please contact me on my email. You can, send me a message on LinkedIn, on Twitter, StockTwits. Please follow all my fellow members of the Leaders Investment Clubs. A lot of great guys in there that can go and do some great market insight. I did. Please watch videos by them, by my friend Ben Banks, who's a technical analyst. Should have a lot of interesting setups this weekend. I did talk to him about some of the charts from the stocks I have, like Coors, Visa, so I could go and ask him what he saw. So I'd just like to thank you guys for watching, and hopefully you'll come watch me again.